Well, Union Bank has released its first quarter earnings and its 2014 full-year earnings earlier this month. So how did the bank fare? Chief Executive Officer Emeka Emowa joins us to crunch the numbers. Thank you so much, Emeka. A pleasure to have you on the show.
Thank you. Pleasure to be here.
Looking at the numbers and the reviews that have come following these numbers have been quite impressive. Now, I mean, the full-year numbers speak volumes considering where Union Bank was between 2009 and 2011. Well, let's crunch the numbers. Let's get right down to it.
Okay.
Starting from your non-interest revenue, that appears to be a growing trend. Looking at some of the Q1 results I've seen, even for the full year, we've seen non-interest income growing significantly, some more than others, but it's been across the board. But let's talk about how you were able, let's start with total loans and advances, how you were able to grow that up 44% to over 300 billion.
Well, as you mentioned, where we are versus today versus 2011, very different. One of the factors is that we're starting from a relatively low base. So 44% growth in loans, it is significant, but in aggregate terms, it's hopefully not alarming. And we intend to continue with that kind of trajectory. We focus on certain industries, certain segments, and we're growing conservatively, but from a low base into those areas.
But you're comfortable, or you're at a place where you can safely move out of treasury assets into higher yielding risk assets?
And that's absolutely what has happened. That's why if you look at the balance sheet going back to 2011, you had a large proportion of treasury assets on our balance sheets, and we're changing that mix into more higher yielding loans, which also it is because of that we're also able to do more on the non-interest side, because what is happening is that we're having more customers that we're lending to, more customers that we're doing transactions with, and that's also boosting that has also boosted our non-interest income. I
mean, apparently confidence is growing, has been growing since 2011 for the bank. I mean, obviously it is a number you can be very proud of. Profit before tax up over 400%, coming in at 26.9 billion from just 5 billion the previous year. What niche have you been able to carve out for yourself? I mean, this is an industry where the competition is fierce within the tier 1 space and the tier 2 space. Even in the tier 2 space, the tier 1s are just trying to dominate, and everybody's just trying to fight for the same. So, I mean, how are you staying afloat?
Well, what we're doing is taking, leverage the advantages we have, right? We're an old bank, and when I say old, Union Bank goes back to 1917. And notwithstanding the intervention, you did have quite a few, customers across the country who have been banking with Union Bank in the past and even more recently. Now, during the intervention, a number of them stepped down the level of activity. What we've done is upgrade our platform, improved our capabilities, and then gone back to these customers to say, you know what, we've been with you for a long time, you've been with us for a long time, we are now better able to meet your needs, which we couldn't before. And we're saying we can do that now. And they're saying, okay, fine, we'll work with you. So it's not so much finding a specific niche, but taking advantage of the broad range of customers that have banked with us for many, many years. Right? It is those customers, right, that we are investing in for the future.
But you've been able to do that even in the midst of headwinds. I mean, from year to year, headwinds come, other banks feel the heat more than others. For a bank like Union Bank, that's just like you said, starting from a low base, trying to grow, trying to get back to a position where, I mean, that brand, yes, it's a strong brand name, but it was hurt in the past. And of course, you need to get people back on board to believe in you and know that their monies are safe. Now, I mean, one of such regulations was, I mean, the removal of the COT. But you're probably hoping that, I mean, proceeds from your e-business, new or diversified product offerings, all of that can offset or help make up for that.
No, without question, right? As we increase our product offering, one of the things we've done is to strengthen our product offering. So as we increase that, increase our trade offering, increase our transaction banking offering, engaging more with clients, we expect, and we already have seen it happening, that some of that income that we've given up, we're able to replace it.
All right. I mean, I suppose that this is going to be something that will continue this year. Your Q1 numbers not as exciting as the full year 2014, because I mean, analysts I have been talking to have said that the 2014 numbers do not reflect the impact of the headwinds the banks suffered in 2014. That is the Q1 numbers that are now actually showing the extent to which some banks were hurt by such regulations.
Yeah, that's fair. I wouldn't say we're hurt, right? But yes, you're right in that the 2014 full year numbers relative to the prior year, there's a significant increase, right? But in the first quarter, right, you would have seen that there is an increase, right, and that increase is what we expect to sustain through the course of the year. I would say that 2013, relative to 2014, was when a lot of work was done. So a lot of the work that we did internally, you saw the impact in 2014. So that part of that accounts for some of the changes. Plus, we had we take revenue and income wherever we can get it. We did have some boost from disposal of some of our non-core subsidiaries, so that also increased our profitability significantly. So all those things are inside, but what we're looking for Q1 going on is a consistent growth.
And you're obviously confident in the strategy that you have employed since 2011.
Yeah.
Right. Okay. Now, speaking about 2011, that's when you and your team...
No, to correct, 2012.
2012.
We joined end of 2012. So it's really 2013 and 14.
Okay, so between 2012 and 2015 now, obviously you've been able to turn the bank around. Since you took over, you came from Citibank, obviously, and you were given that very difficult mandate to turn this huge bank around. What have you found most, in that time, most challenging and most rewarding, steering this huge ship back onto the path of profitability?
Well, we're still on. As I say, we're still at work, right? Very much so, right? The last 2 years, we've spent basically rebuilding the platform, upgrading the platform. And when I say platform, it's not just physical. It's people, it's systems, it's processes, right? And basically being able to use that platform and serve our customers better. That's what we spend time doing. I mean, that's what we're beginning to feel the impact of. Right? What we've set out to be is to be a respected provider of quality service. We want to lead with quality. That's what we're leading with, as opposed to quantity. So the biggest challenge, I think, is just basically being able to get the right mix of people into the bank to be able to deliver on the promise that we're making to our customers. And I think we've got a great team there from the top, I mean the seniors, all the way through the organization, people who are committed to delivering exceptional service to the customers. Yes, there's still some work to be done, but we'll continue to build on that every day. And I believe that as long as we consistently deliver to the customer, right, the customers themselves will reward us with incremental business. And of course,
patronage. Let's talk about banks and the economy. Let's move away from the numbers. Let's talk banks and the economy. I mean, there's been a mixed outlook for what the Nigerian economy, how it will perform this year. But there's still a bit of uncertainty because, we have this new government coming in and everybody's waiting to see how the economy moves on or picks up from there. I mean, understandably, we have to wait for that to happen. But I want to get your thoughts on what your expectations are. Yes, you're a bank CEO. I mean, you're also sort of a business leader. And, of course, the policies of the income and the fiscal authorities go a long way in impacting the economy. What are your expectations for the new government?
Well, I think.
What would you like to see?
Well, I think the incoming government has been quite transparent in terms of what it's setting out to do and what the areas of focus are, right? Which are around the economy, around transparency, things of that nature. So, given that, what I expect to see, what I'd like to see, frankly, is once they get in, to very quickly get to work, because I think there's quite a bit of work to be done.
Just continue and just stick to the business of the day.
Well, it's stick to business, but get quickly to the business of the day, because you come in, right? You've got to put your team together, right? And the quicker you put your team together, the quicker you can get to work, right? Because I think getting the work done can be done. It's just getting the people in there to do the work, and the quicker that we get that done, or the quicker the government gets that done, the quicker that, or the shorter time there will be in terms of people trying to figure out, okay, what's going to happen, what's not going to happen. But once people are in place, right, it will be clear to everybody what direction we're going.
Now, the Central Bank of Nigeria is always looking to banks here in Nigeria to play a pivotal role in supporting the economy, particularly small and medium enterprises, which we know, of course, form the backbone of the economy. Would you say Nigerian banks are fulfilling this role. There have been so many intervention schemes, the 220 billion MSME fund, the power fund, interventions here and there. Are banks fulfilling that role?
Well, to a degree, yes. Right. There's always room to do more. Right. If I look at, as you say, the various intervention funds, they have been successful. The one you referred to, right, which is the 220 billion fund, the utilization has not been as high as we would have liked from the potential users, and part of that has been information. And as a bank, both as Union Bank and as a member of a larger group of the bankers community, one of the things that we've done and are doing is to disseminate more information to the companies to say that, look, this fund is there, right? This is how you can access it. And get in touch with the bank. So part of it is communication, right? And we've started to see much more utilization. If you look at agriculture, for example, which is an area that we've also been very active in, that's been going actually quite well. There's been a lot of utilization, and there's an interplay between agriculture and some of the SMEs, because you find that many of the people who are involved in agriculture, apart from the large corporates, are many small users. So I would say that yes, the intervention has been largely successful. There is some scope for improvement, and what is required to generate that improvement is just more communication, more awareness from the public that is supposed to access such funds.
Okay, now while some of these interventions, I mean, are laudable, obviously, the central bank going a step further. I mean, Mr. Emefiele has said he wants the bank to be a more people-centered bank.
Absolutely.
He's going to be tracking jobs, tracking key macro indicators to ensure that we are moving at least at a reasonable speed. I can't help but wonder those who do not have, who at the end of the day cannot have access to within the SME space now.
Yes.
About over 70% of them run in the country. Those that are shut out from those funds that do not have access to that fund. I mean, what happens to this class of people? And if you look at the percentage of those who actually have access to these funds and the percentage of those who do not have access to the fund, who obviously cannot come and approach a bank like you for a loan because we know that it's still at, upper double digits, and then there's collateral that many of them, that collateral rule, you'll get a chance to speak, that collateral rule that many of them just simply cannot, fulfill, because they simply don't have it.
Now, it goes back to my earlier point, which is there's some awareness that has to be created and some information that people are missing. Because when you say some people don't have access, I wonder who doesn't have access. Everybody has access.
Well,
but
everybody,
you have to have the information.
Not every SME in the country can have part of a piece
you first
of
have to
that
know.
pie.
You first have to know how. Okay. Right? That's what I was talking about. That part of the work that we're doing as banks, collectively and individually, is to communicate more with customers. I think it was last month or the month before, there was some training done for the banks so that to enable them and communicate more with customers. And also, I chair a subcommittee on financial literacy and public enlightenment. And part of what we're doing is basically to communicate more to the larger public, so that these people who you feel don't have access, it's not that they don't have access, but they don't probably have information. So the more information they have, right, the more they can discuss with banks, because there's a bank in every nook and cranny of Nigeria, right? So it's just a question of having that conversation and finding out what is it you need to do to access this financing. Yes, not everybody will qualify, but everybody should have the information, right, and know what the criteria and what the parameters are. And the rates are not double digits. They're actually single digits.
Sorry, what's the lowest single digit that an SME can get from a bank? If it walks into a bank?
Well, if the intervention fund, you can get 9%. 9%? Yes.
Okay, let's talk power.
Yeah.
I mean, we're all very excited when the privatization started. And at the first step, we saw Nigerian banks, rising to the occasion and providing, I think, about 70% of funding, which was, quite impressive. But things seem a bit shaky now, and we've been talking about how exposed the banks are to power, how if it was worth it at the end of the day. What do you make of that? What are your thoughts?
Well, when it says whether it was worth it, right?
In terms, yes, we put all this money to making the privatization work, but now we're at a stage where the discos are complaining. There's issues of tariffs, meters, we're not breaking even. Yes, some might say that's the fault of the discos themselves. But yes, a lot of money went into funding, a lot of money went into ensuring that the right technical expertise was brought in and to ensure that the whole process stays together and moves on.
Yeah. And I think a lot of, as you said, there's a lot of noise, right? And when something new and different is being done, there will be a period when there's noise, right? When you're doing something new and different, it does not work. There's, if you will, there's a period of adjustment, if you will, and I think that's what we're seeing. I don't know the extent to which the discos are complaining, but frankly, anybody who if you set out with a certain expectation of returns, if you don't get quite that, or if you haven't done, if what you find is different from what you expected to find, yes, you complain. But what's important is that directionally, it's still moving forward. Okay. You haven't heard anybody saying, you know what, I don't want to do this any longer. That's the most important thing. The important thing is that people say, okay, fine. It's just a cry saying, okay, well, this is not quite as I would have liked it. Then fine. All the parties sit around the table, make the appropriate adjustments. But the important thing is everybody is still moving in the right and forward direction.
Okay, let's talk oil and gas. We're all hoping that the petroleum industry bill will be passed this year, and that we'll see more investments coming into the sector. The local content is still there. It's helped a lot of local. It's helped a lot of local players. Is that a sector you're going to be taking your chances on this year, or you're going to wait to see how regulation or all of that, the politics around getting the PIB passed and all of that, shapens out, and then?
Well,
is that a big consideration for you?
No, we stay out of it. We stay out of the politics, right? And there's enough business to be done in that sector. What the PIB, I think what the expectation of the PIB is that it will actually free up the sector or free up even more opportunities. Today, there are enough opportunities for us. We're active in the oil and gas area.
Well, that's what I was trying to get.
Yes, we're active there. We will continue to be active. I believe that what will happen when there's more, if you will, clarity around how the industry will operate, it will free up even more opportunities and make it easier to access those opportunities.
Emeka, thank you so much for being here as a special guest today.
Thank you very much.
My pleasure. For being with us. Emeka Emowa, Group Managing Director and Chief Executive Officer at Union Bank, looking at the bank's full year 2014 and first quarter profits, and of course, all about banking here in Nigeria.